Good morning, guys. Welcome to Mug Briefing. General Motors just made two quiet moves that tell you a lot about where the car business is heading. First, the company told thousands of its U.S. dealers that if they want to sell certified used Chevrolets, Buicks, or GMC vehicles with factory-backed warranties, those cars will now need to go through CarBravo, GM's digital used vehicle marketplace. Second, almost at the same time, GM announced it will invest $63 million into its Oshawa assembly plant in Canada to prepare the factory for the next generation of full-size gasoline pickup trucks. Two different announcements, two different parts of the business, but they reveal the same strategy. GM wants more control over how its cars are sold, both after they leave the factory and while they're still being built. Start with the used car side. Beginning June 2, 2026, U.S. dealers selling certified pre-owned Chevrolet, Buick, or GMC vehicles will have to use CarBravo Marketplace if they want to attach GM's factory warranty coverage. Cadillac keeps its own program separate. That sounds technical, but the idea is simple. For years, certified used vehicles were sold mostly through individual dealership websites and local lots. Each dealer ran its own listings. CarBravo changes that. It creates a single digital storefront where buyers can browse certified used cars from GM dealers across the country, compare prices, arrange financing, and schedule delivery or pickup. Think of it as GM trying to build its own version of an online used car marketplace, but with factory warranties and dealer inventory behind it. And this is where it gets interesting. Since launching in 2023, CarBravo has already sold about 216,000 vehicles, but fewer than 1/4 of GM's roughly 3,500 U.S. dealers currently use it. So the platform exists, the technology works. The challenge has been adoption. By tying factory warranties to the platform, GM is effectively nudging dealers onto the system, not forcing every sale online, but strongly encouraging it. And that matters because used cars are a huge part of the auto economy. In many cases, used vehicles carry higher margins, which simply means more profit per sale than new vehicles. Dealers often rely on them to stay profitable when new car demand slows. Now zoom out for a second. GM itself does not suddenly become a giant used car retailer overnight. Dealers still own the inventory and complete the sale, but CarBravo gives GM something valuable: data. More visibility into pricing, buyer demand, inventory movement, financing activity, warranty claims, and potentially more ways to attach services, financing, warranties, repairs over the life of the vehicle. That's where money can accumulate slowly. GM Financial, the company's lending arm, could see more loan originations as more used car transactions flow through a centralized platform. Service departments may see more repair and maintenance work tied to certified vehicles, and factory-backed warranties create long-term customer relationships that can feed back into future new car purchases. But that's only part of it. Expanding warranty eligibility also means GM could cover older vehicles and even some non-GM brands, depending on the program rules. That expands the marketplace. At the same time, it increases warranty liability, meaning GM may have to pay for more repair claims if those vehicles break down during the coverage period. So the math isn't automatic. Higher sales volume could mean higher revenue, but higher claims could eat into margins. Margins, by the way, are simply how much profit remains after costs are paid. And this is why investors are watching execution closely. So far, GM has not disclosed exactly how much revenue CarBravo generates, or how much additional used vehicle volume it expects from the expansion. The platform's success will depend largely on how quickly dealers enroll. Now shift to the second announcement. While GM is building a digital marketplace for used cars, it is also reinforcing the machines that make its most profitable new ones. The company announced a $63 million investment at its Oshawa assembly plant in Ontario. The money will upgrade stamping and production systems so the facility can build next-generation full-size gasoline pickup trucks. those trucks matter more than almost anything else inside GM. Vehicles like the Silverado and Sierra are among the company's most profitable products. In the auto industry, large pickups often generate the highest profit per vehicle, so maintaining truck production capacity is critical. The Oshawa upgrade is not a massive new factory project. It's more like a strategic tune-up. New equipment, updated stamping capability, preparation for the next truck platform. In other words, making sure the plant can keep building high-margin trucks when the next generation launches. For context, $63 million is relatively small compared to GM's total manufacturing spending, which runs into the billions each year. But targeted investments like this help keep production lines flexible and efficient. And this is why the two announcements connect. CarBravo focuses on extracting more value after vehicles are sold. The Oshawa upgrade protects value before vehicles are sold. Both aim to strengthen the economics around GM's core products. Here's where competitors enter the picture. Online used car platforms like Carvana build their business on the idea that customers want to buy used cars digitally, without traditional dealerships. GM's approach is different. Instead of replacing dealers, it's trying to digitally connect them. That gives GM a powerful advantage. Thousands of physical dealerships already exist. Inventory is already distributed nationwide. Service departments already maintain the cars. CarBravo simply layers a digital marketplace on top of that network. If adoption spreads across the dealer base, the platform could become a major channel for certified used vehicles. And that could shift competitive pressure onto independent online sellers that don't have factory warranty programs or dealer repair networks behind them. But the outcome isn't guaranteed. Dealers might resist changing how they sell vehicles. Warranty claims could rise if older cars are included in the program. And digital platforms require ongoing technology investment, which can reduce profits if sales volumes don't scale. Truck production carries its own risks too. If demand weakens or supply chains tighten, factories upgraded for new models could sit partially idle. For investors, the immediate impact is modest. GM stock closed around $78.60 on March 4, 2026, and recent trading around the announcement has shown only small moves. That makes sense. Neither decision changes GM's earnings overnight, but both hint at something larger. Automakers are slowly trying to capture more of the lifetime value of a vehicle, not just the initial sale. That includes financing, maintenance, software updates, warranties, and now digital used car marketplaces. And while GM prepares the next generation of pickup trucks in Oshawa, another question is starting to matter just as much. How many of those trucks, a few years after leaving the factory, eventually come back into the system and get sold all over again through a platform called CarBravo?